Jerome, it's an honor and a pleasure to be here. I think it's really important to talk about the systems that we have in place because that helps to build trust with our investors, and that's what you need to allow people to invest with you. So with that, and just a note, I can't see the comments in the Q&A, so I knew pretty early in my time there that I did not want to stay and become a partner at a firm. So after I got my license, I spent the majority of my career, Fortune 500. I left the firm and worked at the Fortune 500 company for most of my career. And then I went and got my MBA part-time. And as fate would have it, as I was getting into and trying to find out more about real estate, in 2013, everything changed for me. I also joined a multifamily investment group that was based here in Long Island. Well, I'm in New York. It was based in Long Island. One of the things that I did in addition to getting my education is I also started investing in deals. So this slide is just a picture of some of the deals that I was a passive investor in. It was helping me build up my resume of being an investor. When I started my company in 2013, it was really about acquiring properties at a competitive level and really focus on providing clean, quality homes for investors. I mean, for the residents, but also cash flow for the investors. Reports that make investors smile. And I want to say that keep them investing with you because that's the perspective that I have as a syndicator, and that's the business model that I have. So one of the things that we're going to go into as I talk through this is the responsibilities of a syndicator because you are a fiduciary, and I want to talk more about what that is. An understanding of a deal syndication cycle. I'm going to share with you my thoughts on what that is and that process, and then the importance of the reports that you're giving to your investors because they are also the lifeblood of your business, being able to go to them when there are deals. Everything starts in this process with your underwriting. The underwriting, the analysis that you're doing when you're trying to determine how do you believe this property is going to perform based on the business plan that you laid out. So there you have key assumptions in there, and that's what's driving your plan. Then that plan, that underwriting and everything you put together is going into your executive summary. And this is your marketing tool that is going to your investors. It's the thing that you're sharing with them to have them interested in your property. What I did was I bucketed a few key categories for us to walk through: revenue, expenses, your financing, other reserves, and some other assumptions. And all of these things are going to affect your projections of the property performance. So the first item on here is revenue growth. These are some assumptions about what do you think is going to happen over time with the rent. When I look at this line item for the actuals that the current owners are presenting to me, what I'm really trying to understand here is what makes this fee income. Sometimes I look at properties and this was definitely true during COVID. You have fees and they look, okay, what's in these fees? And you have, more than 30%, 50% of the fee income is coming from late fees. So this is a really highlighting that this is like a quality of earnings issue. It's a quality of revenue that you're getting. It's bad quality, and it's actually you're getting revenue from bad behavior. And the thing is, it's not sustainable. Every time you pay down your debt, you're reducing some of the risk, some of the money that you have to pay back to the bank. So if you're going 8 years without paying anything to the bank, that's a very risky way to manage that property, and you're really not de-risking that debt at all. So I'd be cautious of that. I think personally for myself, I wouldn't be looking at anything over 36 months. Talking about the exit cap rate, but this is it's a number that will impact, and it's a very sensitive number that can really impact how your deal is showing in terms of your overall projections and what the expected returns are going to be. So it's something to also be very mindful of. Usually, rule of thumb is, what is your going in cap rate? What are you purchasing it at? And using anywhere between 10 to 20 basis points for each year of hold, adding that to it. So that's something that people sometimes use as a placeholder for that. But, just wanted to talk about that because I think it's important to understand these assumptions. These are all of the items that are then going into your executive summary. you are working alongside your property management team, as I mentioned, and really best practice for this is to make sure you're having your weekly meetings to understand your key metrics of performance and looking at those metrics, determine how the property is performing versus a plan. And another important thing is always ask why. That's a very big thing for me when we see that there are differences from what we wanted to see versus what's actually happening. Why is that happening? Cash flow distributions and making sure that you understand what that is going to be planned out for your investors, as well as providing them with the K1s. And I think a big part of the investor relations piece is managing expectations. And usually we're setting those expectations in the very beginning. Once we are presenting the opportunities to our investors, we're normally doing quarterly webinars. During those webinars, we're providing information about what's happening on the property. But then we're also giving updates about timelines for example, these annual statements that we have. We're using that as a mechanism to communicate with our investors. This is sort of following the same trends, and you can see that uptick that's happening and ended up being very strong cash flows after this period of time here. We also sometimes drop in the budgeted amounts, but just for the purpose of this, we just wanted to show that some of the information that we're sharing with investors can just be visual. You can easily see what's happening when you look at a chart, and then it's your responsibility to just talk through to actually talk through what's happening. I think it's really important to understand that deal syndication cycle that we talked about, and really reason that you're looking at the level of reporting and understanding from the very beginning your underwriting is that it really helps you articulate what is happening on your property and to your investors, and then having that communication with them is the key to your success as a business, and then also for them to continue to invest with you and to tell others about the great work that you're doing. Especially, and I have to tell you that having some of that corporate background did help in thinking about investor relations, because we always had to give updates and presentations and information to our leaders in our organization. So I knew that was something that you had to communicate, but I'd say that learning from other people who've done it before is also very important. Again, just the multifamily group that I was in at that time when I started, that was a big thing that the leader of that group had mentioned. As time went on, working with other people, talking to other people, trying to find ways to present things in a simple yet clear way for people to easily follow. That's not unlike myself. Most people don't really like numbers. So, trying to present it in a way that it is easy for them to digest, and you can see what's happening in a chart. Then you have to understand what is really happening so that you can explain it.